What's up, everyone? It's Kadi with MoneyVest. So this is going to be your weekly technical update on the market. So we are going to cover all big tech FANG stocks as well as the markets here and talk a little bit about the percentage of stocks trading above, below their moving averages. So market breadth and volatility also included. As always, if you enjoyed this video, find it helpful, make sure that you drop a like and subscribe to the channel. I would really appreciate that. And links to our Discord and Patreon is also going to be down below if you're interested in joining and, of course, getting access to all the members-only private videos. And I also want to announce our Psychology of Investing and Money and Markets course is now launched and live. The coupon code is going to be launched. This is literally my most important work that I've ever done. I'm super proud of this. And, there's over 25 to 30 lectures. I will be uploading more and you get lifetime access. This is basically a compilation of my 9 years of investing, reading many books on finance, investing, trading, business, and making every possible mistake. So if you want to master your psychology, again, I use the word master, but really it's a learning process. It's a ongoing process of learning about yourself as you're investing and you're taking on risk every single day. But this, will certainly help you in your personal finance journey, in your investing, in your trading, and kind of managing money, and also a little bit of philosophy of life. So coupon code is going to be launched. And there's also a Thanksgiving sale. By the way, we now have 4 courses: fundamental analysis, technical analysis, options, and also the psychology of investing that I just launched. And coupon code Thanksgiving is you can use across the website for 50% off, 50 to 60% off, depending on which course you're getting and which bundle you're getting. But the entire website, there's going to be 50 to 60% off, coupon code Thanksgiving. You can apply that and get access to any of these educational courses for a lifetime. So I'm going to be uploading them, more and more content, more and more lectures over time, forever. So starting with this right here is the S&P 500 stocks trading above or below their 20-day moving average. As you can see that we are sitting at 86% right now, which obviously is inside this red rectangle, which we have talked about in the past, that every time we come up to this level, we do see a bit of a pullback. So again, this is not anything unusual. This is something that we have, again, witnessed time and time again. And you'll notice that we do see a little bit of a short-term pullback. So given how overbought the markets are, a little bit overextended on a technical basis, wouldn't be surprised if we do see a little bit of a pullback, as we have talked about in our previous videos. Of course, the last couple of weeks have been very, very strong, but we have to be a little bit more cautious now going forward, especially when you consider the market's technicality and the fact that we are approaching these red areas, red zones, which are going to be, again, at 80 to 90% of stocks trading above their 20-day to 50-day moving averages. Again, in the past, you'll notice every time we've gotten up to that level, it's sort of a very common to see the markets to see a bit of a pullback or a somewhat of a 2 to 3% dip in the markets as well. This right here is going to be volatility. So VIX is now at 13.81. This is where we are, and we are now approaching the 20th percentile. So as soon as we kind of dip below this red rectangle or get anywhere near close to this red rectangle, I think it's going to be very important for us to continue to be cautious. We've talked about when the VIX is low, it's time to go. When the VIX is high, it's time to buy. So this right here was really the opportunity to buy. And since then, we have obviously seen the volatility drop quite substantially, but maybe it's got a little bit more downside here. So if it continues to slide lower, maybe the markets have slightly more upside, but on a risk-reward basis, that's what we're here to assess, right? This is the overall risk for the market, right? So for volatility to spike higher, that's the risk. And this right here is the potential reward, right? So the risk reward is really not that favorable in the market right now when you compare that to what it was over here, right? This right here was the entire reward versus how much higher can the VIX really go from those levels. Of course, if there's any situations that can blindside the markets, there's any repricing risk, volatility can literally just go up to as much as 30, 40, 50, 60, 70, 80. But that's what we're here to assess, right? Risk and reward. And that's really what it comes down to, right? We're not making predictions. We're not, predicting what's going to happen next. But really what we're doing is trying to assess what's the current risk reward setup in the market, so we can kind of understand, okay, do we need to be aggressive? Do we need to be a little bit more risk averse? Do we need to be more cautious? Do we need to deploy cash? Do we need to sell calls? Do we need to sell puts? Like, that's what we're here to discuss, is the risk and the reward in the market. So this right here is the month of November. And November month has been absolutely phenomenal. I mean, S&P 500 is up a very whopping 7.6% just in the month of November alone. This right here is the weekly chart. You can see the last 3 weeks, absolutely phenomenal movement to the upside. And this right here is on the daily chart. Again, I want to point your attention to the RSI readings and the MACD as well, and how overbought we're starting to get with this massive explosion to the upside. And now we're approaching this resistance at 4,500. So this right here is going to be that level to watch, in line with this previous resistance where we have obviously gotten rejected before, all the way up to this resistance that's going to be sitting at 4,600. But one thing at a time. So going into next week, this right here is going to be that level to break out of. If the S&P can break past this level, then we're going to worry about 4,600. But first, it's 45, 45.15, around those levels, kind of in line with this previous resistance where we did get rejected. And if you do get a breakout, which again, from a risk-reward perspective, from a overbought, overextension perspective, the probability is low. But given how strong the sentiment is, there is a possibility, but probability is low, like I said, going into next week. Again, this right here is the S&P 500 on the daily chart. This is the same exact resistance we're approaching. This is the overall lower high and lower low pattern, which we have now broken out of very, very nicely. So we're actually making some higher highs here, but then we'll also need to wait and see that confirmation for a potential higher low. As soon as we get a higher low, then that obviously is going to be a nice uptrend for S&P moving forward. This right here, again, is the weekly chart. And those two are the levels to watch. Now, one thing I wanted to point out as well is that even though the markets may seem overbought on the daily time frame, on a weekly time frame, not so much, right? Maybe a little bit more upside here, just a little bit under 60 RSI. So we may have a little bit more upside here. And look at the MACD here. Perfect setup for a crossover above the signal line. And on a weekly time frame, it does seem like it's got more potential upside. And on the weekly time frame, you could even argue that the move is literally just getting started. So daily time frame, overbought. Some of the shorter market breadth indicators, 20-day, 50-day moving averages, overextended. But on a weekly time frame and longer time frames, the move is literally just getting started. So like I said, my read on the market right now is a short-term pullback, but longer-term uptrend continues, as we have already seen over the last 3 weeks, to be very, very strong and now starting to make a higher high. So that is something to keep in mind. Short-term pullback versus long-term opportunity to the upside is remaining intact here for the market. And this right here is the NASDAQ, up over 9.9, almost 10% in the month of November. So very, very strong move to the upside. This right here is the overall lower high and lower low. And of course, we've started to break to the upside with a very nice higher high. And now we really need to just wait and see a higher low print for the NASDAQ. And that's going to be, again, inside this uptrending channel. And now we're approaching this resistance here at 14,200, kind of in line with the previous resistance where we got rejected before. And that's exactly where the markets are right now. This is the weekly time frame. So beyond that, of course, that's going to be the all-time high for the NASDAQ here, sitting at 14,400. So, of course, is that going to be all-time high? Maybe not. No. I don't think it is. I think the NASDAQ's approached 15,000 before. Yeah, so this right here is going to be Apple stock, but going back over to the NASDAQ, so first level of resistance, 14,125 to as much as 14,400 for the NASDAQ as well. Now, coming over to Apple. Now, Apple is extremely overbought on the dailies, right? So we've got an RSI, which is sitting at over 70, almost 71 now. And the MACD has also been very, very overextended, not to mention the price action. This right here is the entire move to the upside. A very, very strong move to the upside. And of course, resistance is going to stay put at $190 in line with this previous resistance where we have gotten rejected before. So those right there are going to be some levels to watch. Now, I have mentioned before that Apple has remained overbought for a very long time here. So you can see the RSI can stay above 60 and 70 levels, and the price can continue to move higher in this uptrending fashion. So it's not unusual for the RSI to kind of spend some time here in overbought territories, but eventually we do know what's going to happen, right? So it's not a question of if, it's a question of when. This is a perfect example of why I say that. I say that is because eventually, look what happened, right? Price dropped. You see a significant sell-off in Apple stock. Same thing happened here. RSI selling off. Price drops here. RSI didn't quite get up to 70, but again, the price here drops once again. So it's not a question of if, it's a question of when. RSI, like I said, can spend some time up there, but eventually we do know what's going to happen. It's going to slide lower to see a little bit of a pullback. Now, this right here is going to be Amazon in a very similar situation as Apple, kind of approaching that resistance here at close to $146, $147. RSI, again, spending a little bit of that time above 60. MACD is also a bit more overextended, overbought, and support level is going to stay put down to these levels here, sitting roughly in the 120s. And we've also got a little bit of an intermediate support, as I would like to call this, at around $136, $137 per share. Now, Tesla, I did a video on Tesla earlier, so make sure that you do check that out. But this right here is still within the context of this downtrend. Very strong rally in the month of November. Actually, Tesla's up over 16%. But we're approaching this resistance at $240, and that's going to be that level to watch with a massive amount of supply. When I say massive, I mean a massive amount of supply sitting between 280 and 320. So that really is going to be that area of supply, area of resistance to watch for Tesla. And we haven't quite seen $300 plus levels since September for Tesla either, right? So that's going to be some levels to watch also. This right here is going to be, again, the overall downtrending channel of lower highs and lower lows. So this right here is the downtrending channel. This is the broader downtrend. And of course, that's exactly why there's a lot of supply, because we're also coming up to this lower high within the context of this broader wedge for Tesla. That's exactly where the resistance sits for the company. Now, going over to NVIDIA. NVIDIA is reporting earnings next week. Did a video on NVIDIA earlier, so make sure you check that out. But this right here is the overall consolidation for NVIDIA. It's just been, trading sideways in that range. And we're also, again, coming up to that resistance where we have previously gone rejected a couple times before. So you can see that this is a very important area of resistance at $492 to $500, with, of course, a massive amount of support sitting right over here in the low 400s. We bounced off of that level very, very nicely. So NVIDIA's earnings coming out, consolidation right now in that range. It's possible that we see a breakout. It's possible that we drop. Nobody really knows. NVIDIA is really, really volatile. AMD, on the other hand, also approaching that resistance here. So you'll notice that we have gone rejected here a couple times as well. $120, $121. And of course, the price has absolutely exploded in the month of November, bouncing off of that support in the low 100s. And the RSI MACD also very, very overbought. So we got to keep in mind that, yes, there's sentiments very strong, but technicals are overextended and overbought at the moment. So this right here, of course, is AMD's RSI and MACD sitting at just over 68, and the MACD, of course, also pushing higher pretty significantly. And this is going to be that resistance at 121, kind of in line with this previous level that we have talked about. So Meta, on the other hand here, making a very nice higher high. So even though we have seen, again, a very nice move higher on the RSI MACD, price has also moved up. It's making a higher high. So that's actually pretty good. There's actually a lot of stocks now that are making a higher high. So a lot of them I would consider to be in an uptrend. So if you come back here, I would put down Apple in an uptrend, right? So making a higher high, that's pretty good. Amazon, not quite. It's still a little bit of a consolidation, right? So we're basically in that range trading right now. So this right here is the range that I just deleted. This right here is the range. For Tesla, however, we're still in a downtrend a little bit. So NVIDIA, lots of consolidation, so we're still in a bit of a horizontal pattern. Advanced Micro Devices starting to make some higher highs, so that's pretty good. It's similar to Apple. It's just made a higher high. Now we need to wait and see for a higher low. And Meta here also making a higher high, so that's actually pretty good for Meta as well. So that's going to be the price action. Of course, RSI MACD also a bit more overbought, something to keep in mind. Now, however, on the weekly time frame, once again, you'll notice the longer time frames do suggest more potential upside because, again, you can see the MACD here. If it crosses over that signal line, that's going to be bullish. And RSI here on a weekly basis, 68. So, I mean, one could argue that this is overextended, but the MACD does suggest more potential upside, with the price action also being very, very strong and a massive V-shaped recovery for Meta platforms. Now, going over to a few more companies here, let's take a look at Google. And Google here, we've already talked about also a little bit of that consolidation pattern where, it's trading in that range where the resistance is going to be staying put at close to $139, $140 for the company. So this right here is going to be that resistance. And of course, support level is going to stay put down to 126. And Microsoft is one that kind of scares me a little bit. It is a bit more concerning than compared to other stocks because it's got the most overbought RSI, most overbought MACD, and it's now starting to show signs of a bit of a pullback. Support level continues to be at 366, which obviously got validated on Friday. But if we do see some more, pullback here on the RSI MACD, some profit taking, some price action deteriorating on a shorter week because, again, Thanksgiving's next week, so we've got a shorter trading window. So volume's going to drop off. Liquidity is not going to be as strong. So if you do see a breakdown below 366, next level is going to be down to 340. And then finally, we got Netflix. And Netflix here also is one of the companies, along with Microsoft, that does concern me a little bit, where we've got the RSI and the MACD also a bit more on the overextended, overbought side. 452 is going to be that support. Now, look, I'm not one for making predictions in any of my videos. As you guys know, I hate making predictions because I know that most of the times people who make predictions, they are going to be wrong and inaccurate or incorrect. So there's no way to consistently be correct on your predictions. But what I will say is that the risk reward going into next week on a short-term basis does not look as favorable on the long side. However, the long-term trend continues to be intact, because if you look at the weekly and the monthly timeframes, the RSI and MACDs could suggest that the move is literally just getting started. As a lot of individual stocks are making higher highs, there's potential for RSI, for the MACD to kind of move back higher. And if you look at the longer market breadth indicators, like for example, percentage of stocks trading above their 200 SMA or their 100 SMA, we're still below the majority, right? So still, that's majority of the market still trading below their moving averages when it comes to 200 and 100 SMA. But of course, shorter market breadth, shorter moving averages like 20 and 50 day, majority of the market's already moved back up. So my read, and to conclude, on a shorter time frames, on a daily time frame, and we're talking days and weeks, the market is overbought and overextended. It's literally technicals. But on longer time frames, weeklies and monthlies, the move is just getting started. So the way I would look at it is a pullback and a dip is somewhat probable, right? So I would be cautiously optimistic on the short term. But of course, over longer time frames, I would be very optimistic and bullish on the market. As there's some macro play as well. We're not here to talk about macroeconomics right now, but as earnings, continue to hold up on the back of, very, very resilient jobs numbers, unemployment continues to be very strong. Inflation is showing signs of coming down. So we did get a very good print last week. And it really is going to come down to the Federal Reserve and interest rates and where they end up going. So if they start coming down, that's going to create some more momentum for the markets to push back up to almost all-time highs again. So hope you guys enjoyed this video. Found it helpful. Make sure that you drop a like. Don't forget to subscribe to the channel. Don't forget, we do have our Thanksgiving sale right now for all the courses, 50 to 60% off. This is our biggest sale of the year, and I'm sure you're going to love all the courses, all the lectures, all the videos that I've put together on fundamental analysis, technical analysis, options, and psychology of investing. Also is going to be the new course, 50% off, coupon code LAUNCH, if you want to take advantage of that as well. As always, happy investing, and I will see you all in the next video.